Hello everybody, my name is Sonia Narvaez. I'm a CPA with CPA Accounting and Tax Services. Today we are going to briefly discuss the tax implications of selling your rental property overseas. Rental properties overseas are just like any asset you may own. There are a few differences. A couple of them that are very important to remember. When you sell your home overseas, there may be some exchange differences money-wise. You must calculate the capital gains based on the specific date of the sale of your home. So when calculating your capital gains, what you want to remember is things that you did to your house, such as a kitchen remodeling, a roof replacement, any flooring, large items that were not really written off during the course of the rental years. That is something that you will have to remember to include as part of the sale or the cost of this property. Additionally, you will be able to write off all the commissions, all the expenses that were incurred at the time of the sale. I hope you remember all these items when you do sell your rental property overseas. If you enjoyed this video, subscribe for more. See you next time.